and then some direct China exposure, which I want to ramp up on a pullback.
Is it going to be different this time? Welcome everybody. In this video I try to speak about the question whether or not we're going to get a drawdown in Chinese names in the coming days and weeks. By the way, by the end of the video I'll also talk a bit more about NIO in specific. So we had this a couple of times, right? So stocks are sharply rising. This is the HSI, by the way, so I'm taking that one as a proxy for Chinese companies. They're rising, and then followed by a long downturn, right? And now we had a very sharp rally up here. And I'm not gonna lie, things look a little bit toppy here, meeting the upper side of this uptrend channel here, but also, kind of a resistance where it's been before. However, this time the monster rally started when the Fed started cutting rates. Like I said, then also the Chinese government will do something and ease policies. That's what they have done, and we've seen the effects. Suddenly we've got people coming on TV like David Tepper.
So the question was China going to do the things that you want them to do? Okay, are they going to do the easing measures that you want them to do? And he said, we'll do more and more if needed. Now, the Chinese to say we'll do more and more if needed, they don't say that because it's not been healthy to say those sort of things in China. But they said that the other night, and I've listened very carefully what government officials say. So I took it that they did a lot, they exceeded expectations, and he promised to do more and more and more.
And he's basically saying, look, buy everything. He's built a China position before that, actually. So most people who are watching this channel, I guess, are invested in Chinese stocks already, like David Tepper also has been, and Michael Burry. However, and that's my argument now, I think there are many people still sidelined, and that's because what I've seen yesterday by remarks of another investor, Dan Niles.
That market finally start to take off. And so my overarching theme is don't fight the Fed is what I've been going with for the last several months. And now maybe you add don't fight the PBOC, the People's Bank of China, on top of that, because between the two biggest economies in the world really trying to stimulate, you're probably going to have a pretty good stock market for the next 12 months. So I have a kind of a barbell strategy right now where I have some risky stuff in biotech, for example, which benefits from rates going from 5 to 3 because those are long duration tech assets. I've got some more conservative defensive stuff that benefits from China, which is, as I said, the consumer staples sector. Utilities, funnily enough, because they become an AI play, are also interesting, but they also have high dividends, which benefit from rates going lower, telecom services, and then some commodity exposure, and then some direct China exposure, which I want to ramp up on a pullback, but I'm very wary about the election coming up, given it is a pretty close race. And 100% tariffs clearly will not be taken well if that ends up being where we start as a negotiation, first stop.
So his comment actually suggests that if there will be a dip, which he is kind of assuming, he wants to get more exposure to Chinese names. He's kind of framing it before in a way that, look, I've got some US shares that have exposure to the Chinese market, and that's the way I was positioned for it. But he's talking explicitly for, if Chinese stocks were to go down, I'm going to buy them. And, now we're at this situation here where the HSI is trying to, actually quite a bullish close today, I must say, up 2.8% and slightly going above this rejection level here. But you never know, these levels, they play out over a couple of days, and it could be that we just get this pushback here and maybe a retest again, something like that. Who knows? That's all for speculation, but let's talk about some fundamentals here, which are that Dan Niles said that, in the past we had don't fight the Fed as a mantra, and now we possibly also get don't fight the PBOC, so the People's Bank of China.
And so my overarching theme is don't fight the Fed is what I've been going with for the last several months. And now maybe you add don't fight the PBOC, the People's Bank of China, on top of that, because between the two biggest economies in the world really trying to stimulate, you're probably going to have a pretty good stock market for the next 12 months.
So despite the fact that his analysis seems to be on point, that now China is serious about it and it's kind of a different type of stimulus than we've seen in the past, plus also that the Chinese stock markets also rallied a lot in the past whenever the government came out and supported the company, the economy, the way they are doing it now, or seems to be doing it now. At these points, investors still seem to be sidelined regarding, well, the timing is now obvious in the hindsight. However, maybe they have not anticipated, and so they might be the fuel that could lead a potential downturn to, go not as deep as the previous downturns, and also maybe even be a fuel more to the upside in the coming months. And I think that will be the case in case we get additional stimulus, or measures in general, not only money, but also maybe some policy changes and also some fundamental changes. Because you can see in these comments that investors are up to date, still not entirely convinced. And I still see also lots of, kind of bearish takes out there, but also more conservative or, questioning whether or not the current stimulus that we've got is already enough to kind of turn the tide here. I think what we will see though is more support to reach this year's goals, and then based on the election, I would say we might see that China really goes big in the way they can support the economy if we also get the Fed rate cuts. And here's another point where I think investors like Niles might be a little bit late to the party, in terms of that they are still assuming that Trump might be the ultimate bad negative news that it always has been for Chinese stocks in the past.
Now, obviously the big elephant in the room is you get to the US elections. If President Trump becomes president again, he's talked about putting up to 100% tariffs on China. Obviously, that's a negotiation ploy to start with, but that obviously changes the picture quite a bit in terms of where this rally goes. So I think for investors, they have to keep that in the back of their mind as they're looking at this move, because it's not going to be a straight line. You can suffer you go back and look at 2014 to 2015, there were some pretty large drawdowns on that move higher.
I understand they might slap on tariffs and such, and that's true. But on the other hand, we have the Biden administration, which has been so hawkish on China that I can't even imagine a new administration being more adversarial to China than the current one. So I'm not sure if this projection by Dan Niles actually really turns out true in the end, and that ultimately might be the case why potentially there could be additional buying pressure from investors which are realizing this in the future.
However,
you don't have
the other thing I thought you were going to ask is about tariffs and stuff like that. I do not care.
Yeah.
This is internal stimulus. In the fiscal stimulus they did last night, they're going to encourage consumption, directly saying it. So they're really doing all the things that people have asked them to do over these years.
So this sentiment that I see now among investors, and more actually going publicly on TV and speaking about that, is what is really different to the last instances that we've had. Speaking of NIO, here I made up the chart. It has actually not met the real resistance line at around 8 USD yet, which I said before. However, as I pointed out in HSI, it's looking kind of toppy here. So I'm not sure what could be the short-term catalyst to contribute to this rally. Maybe that next week the holidays in China are over and people, including investors, are coming back, and maybe that could fuel the rally again and maybe lead to a breakout in HSI in the metric that I've just shown, and for a continued rally here for NIO. And regarding the catalyst for NIO, this could actually be the onward sales or the boost that they possibly bring to NIO delivery numbers in the next couple of months and quarters. So maybe already the next weekly numbers could give us a short-term indication that might be bullish for the stock. I know today we've got some bad news around the European tariffs that are being slapped on Chinese names. In my opinion, there is no need to price that into NIO stock at all. There's zero future projections of NIO sales globally priced into the stock, in my opinion, given at how low it trades in the multiple ranges. So the effects of these European tariffs might not be even materialized, and NIO might actually work around that with factories in Europe at a later point in time. So we're gonna find out. But that's just my opinion. Let me know what you think in the comment section. Is it different this time? Can this rally still sustain, or are we due for this pullback that seems to be very obvious at this point? Let me know. Thanks for watching.